Hi everyone, today let's talk about inflation once again as we head into CPI week. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So inflation has obviously been affecting markets, but let's see what they have to say about it here. It's obvious that the higher inflation that we've been seeing over the past 3 months has been making it more challenging for central banks to make decisions. And they did finally come out in this last meeting and say that they are holding off on cuts until we see some better data. They acknowledged the 3 months in a row of weaker data. And we once again are here looking at CPI this week to see if that trend is going to continue. And if it does, I just can't imagine we're going to see any cuts. And that could be quite dramatic for markets. Markets are still looking for at least 2 cuts this year. First one being in September. And if this CPI comes in hot, that could absolutely price out that cut, and that could be weaker for markets. And they mention here that makes it significantly harder for us to see that soft landing theory. Lots of people have been talking about it, soft landing, no landing. What's that going to look like? But if we don't see any cuts, it could be significantly more bumpy and a harder landing, meaning that we see either a recession or a full-on depression. We really haven't seen one for quite a long time, and it seems like we might be due. And then they mention here, it is pretty widely accepted that monetary policy acts with a lag, so we don't need to wait until we see inflation coming all the way down to normal levels before we see a cut. But if inflation surprises to the upside, that's going to make it significantly harder for the Fed to be able to front run that economic weakness, which does seem to be coming in. We did see some weakness in the job market. We did see initial jobless claims jump up a little bit this last week as well. And does that mean that rates are going to stay higher for longer? It absolutely seems like that's the case for now. And if that target rate for the central bank and the cuts this year continues to fluctuate, that could generate uncertainty and weakness in markets. Moving over to fear and greed, you can see we finished the week at a 48. The previous week was a 40, so you can see on the timeline we are going a little bit higher here. It's worth noting that we didn't get as low as we did here in October, so we didn't hit those extreme fear numbers down around the 20s, which is a little bit concerning. We are holding a decent level. We did get into regular fear at 32. That was the low from this previous kind of dip. But I'm highlighting this here because you can see when we got into this 40 area here, some fear, basically neutral. You can see once we got a little bit of a rally up into the 50s, regular greed, we ended up dipping lower into that extreme fear area. And that's the concern here. We maybe get up into the 50s, 55 area, 1 or 2 more days of bullishness, and then we dip into that 25 area, get a lower low, and then we can see markets actually gain a little bit more sustainable strength. So something to keep in mind there. And then looking at momentum, still looking at greed, extreme fear on strength. So we definitely have mixed signals across the indicators still. Still hovering in fear, put call ratio still in neutral, and we have volatility still in neutral here as well. And then safe haven demand still sitting in neutral, and then junk bond demand sitting in regular greed. So still mixed on the indicators, but we are seeing safe haven demand rally up here a little bit. Moving over to the AAII survey, you can see the bulls stepped up to a 40.8, bears stepped down to a 32.8. So this is a pretty substantial swing. The neutral is still quite high here at a 35.4, but we're definitely getting into that territory where it's a little extended. We're above the averages here for the bull side. We're well below the averages here for the bear side. Again, indicating that the short-term move could be terminating over the next couple of days, and then we could see a deeper cut, in my opinion. Moving over to seasonality, you can see we are expected to see some bearishness next week, and I do think that that is going to come at some point. Whether it's right at the beginning of the week or if it's in that midweek time period, I do think we're going to see some bearishness. And you can see on this chart, historically, it is a double bottom, but it could even be a slightly deeper cut. If you look at the blue dashes being the NASDAQ, you can see that first dip is down around 0.75, and that second dip is down here around 1.25. So overall, it looks like a double bottom, but some of these second bottoms could be even lower. So that would give us a third low based on current price if we did see another dip, a slightly deeper cut, and then that third dip being even lower. Looking at the May trends, you can see Monday is historically bearish. We also have expiration week this week, which could be quite bearish as well. And then we have tons of data here this week. CPI on Wednesday, retail sales, that could be interesting. Philly Fed survey and leading indicators there on Friday. And then the following Monday, the 20th, that is expected to be bearish as well. And you can see during this period, and you can see during that following week, it's pretty mixed. Some of these are pretty solid up days, the 23rd being one of them, up 14, down 7, and then that Friday session, 12 up, 12 down with an average of minus 0.3. So definitely mixed signals over that next time period, and that fits with the monthly thesis. Moving over to earnings, there is still a little bit of earnings. We have Home Depot, Cisco, Walmart, and John Deere, and that pretty much wraps it up for the week. The earnings season is just about done, but there are a few big companies left over. Moving over to the economic calendar, Monday, pretty much nothing. Tuesday, we do have PPI, and we have Jerome Powell speaking, potentially there at 10 o'clock. Looking at Wednesday, we have core and headline CPI. That's going to be the big one for the week, and then we have retail sales there at 8:30 as well. So quite a bit of volatility coming in on that Wednesday session, especially if that CPI goes higher again. That would be another month in a row of higher CPI, definitely concerning if that happens. We also have Philly Fed Manufacturing here on Thursday at 8:30. Home starts. Also have home starts here. That's been interesting more recently. Fed balance sheet at the end of day Thursday. And then for Friday, we have CPI for the Eurozone. And that'll wrap it up for the week. Moving over to Max Payne. This is a third week options expiration. You can see 3.6 million options. Put call ratio extremely high there at a 4. Massive put wall here at 500. Puts already up at 159,000. Massive put wall. You can see it's way higher than everything else. Top of the puts up around 521. You can see some calls there at 530. So 510, your Max Payne. If we get a Max Payne finish, that would be about 2% lower. So do keep that in mind. I would say we're probably not going to go lower than that massive put wall there at 500. So finish around the 510 makes sense. Anywhere between 510 and 520 makes sense. But again, the top of the puts are already there at 520, 521. So probably not going to see too much more upside. If anything, we would see a slight dip with some solid support around that 2% down area. Moving over to the charts, starting off with the SPX here on the monthly chart. So far, it's been a strong month, 3.71%. Previous month was over 4% down, and you can see momentum regaining some strength. So that is a little bit bullish. If we were to close right now, you would expect at least one more bullish candle. But it is worth noting, you can see that monthly chart right at that trend resistance, currently sitting at 52.50, which is just about 30 points higher. So again, that would fit with the thesis of one, maybe 2 more days of bullishness hanging out in that zone. And then we'll see what happens from there. If it's going to reject, is it going to hold this for the entire month and then we roll down, or is it going to reject from the zone and we're going to get a second month down similar to what we got here? So you can see 1 month down, got that momentum stepping to bearish, and then you did get a second month down, but you can see there was a pretty big wick on that third candle where it tried to regain some of its strength and then ended up breaking lower. And then looking at the weekly chart, again, you can see that same trend line. We've been watching these for a while. Marks a perfect top here in July. After marking this gap down zone, a couple of interactions there, touching that same area, pushed through it here and rejected, pushed right to it here, almost to the penny. It seems like we're probably going to break down, but look at this momentum on the weekly chart. Did see a step up, so that's quite bullish. If we get a continuation, your upper trend here would be at 5,400, and that would be a really substantial move. I don't know if that fits with the Max Payne thesis, but it is possible based on what the charts look like. And then looking at that daily chart here, you can see 7 days in a row of bullishness, overthrowing this upper trend line. We've been hovering in that zone for a couple of days now, and we are just a couple of pennies off of that all-time high. That resistance for me, 524.23, and that is the level that you're looking at. We did technically close below that 520.80 area, and if this rolls over right here, which it seems like it might, you can see we are almost culminated here on this momentum. If this steps down on the Monday or Tuesday session, you would expect this to roll down pretty substantially. But right now, everything is just barely bullish, so keep that in mind as we run into that Monday session. Moving over to the Tasty charts, you can see that upper ATR band. That's really what I want to highlight here. You can see it's sitting at 527.36. Last time we touched it, we had a hold down month. Seems like we're probably going to touch it one more time, and then we'll see what happens. Momentum back to bullish on the volume-weighted MACD. So again, still looks a little bit bullish, but definitely hesitant. And then looking at that weekly chart, really substantial move higher. Still in bullish conditions. ATR support still at 485. It's been flat for a couple of weeks now, all through that dip low. Held the mid here, and now we're pushing back to that upper ATR. You can see that upper ATR on the weekly chart is at 532.80. So that would be a nice move, and that would take out this previous high. We're just a few pennies off of it, so it seems like we're headed in that direction. And then looking at that daily chart, you can see we did push back into bullish conditions here on 9 May. Held that condition here on the Friday session. Again, a little bit hesitant, but it's still in bullish. And then looking at that upper ATR band here at 525, 560. So there's a lot of different resistance areas right in that 520 to 527 area. If we push through that zone, we'll be in price discovery. If we reject off that area, we're probably headed to a lower low. And that lower ATR band here on the daily chart is all the way down at 489.30. Moving over to the NASDAQ here on the monthly chart, very similar thesis to the S&Ps, except we have not seen that monthly momentum step back to bullish. So this is technically swinging back down to bearish. On the monthly chart, this indicator is a little bit less reliable. You can see on this up move, we saw 2 months of bearishness, switch back to bullish, and then stepping back to bearish, and then back to bullish. So this indicator does not tend to be as accurate on the monthly chart. So we'll see how it plays. But right now, we are coming off an area of support. Seems like we're headed towards that upper trend line, which is going to be up around that 19,000 area. That would be significantly higher than current highs. So everything still looks good here on the monthly chart for the NASDAQ. Looking at that weekly chart, you can see that same trend. We're back above all the EMAs and SMAs. Weekly momentum continuing to swing to bullish. And looking at that same thesis here on the triple Qs, you can see that week of bullishness, 1.51%, hitting those upper trend lines. We've been in this short-term bullish channel. Momentum looks okay there as well. And then switching down here to the daily chart, again, same thesis. We're within that channel. We did get a higher high on that Friday, did wick reject off of that 443.91 level, but look at this momentum on the daily chart. It's very similar to the S&Ps where we were basically flat from that Thursday into the Friday session. Momentum is still bullish, and this could absolutely step up one more time and continue that bullish trend. Your resistance is still 443.91, and then above that I have 446.66, which is basically the closing high from all of these candles. We did technically get all the way up to 449.33 on that 21 March candle, but we never closed above that 446.66 level. So again, within pennies of that level, generally you assume you're going to test the level when you get that close. But momentum is showing us that this rally is just about done. Moving over to the Tasty charts, you can see that upper ATR band is at 448.36. Again, fits with the overall thesis of just a tap of that upper level before we start to see rejection. ATR support on the monthlies all the way down at 345. So over $100 lower from here, and you can see sometimes we grind along that upper ATR and it takes a long time to reverse. So you do have to factor that in, but eventually we did hit those lower ATR bands and we went from that 404.50 area all the way down, breaking those ATRs down at 305, ended up bottoming out around the 250s. And the question is that going to happen again, or are we going to grind along that upper ATR for a couple of months? And then looking at the weekly chart here, back above all the EMAs and SMAs, momentum on the volume-weighted MACD stepping towards bullish, so we might see this swing up to that upper ATR. This rally's been decent. We haven't taken out the previous high yet, but we're within striking range, like I've said. Upper ATR on the weekly is going to be 469.65. Absolutely would be a massive move from here. And you can see these ATR bands are trending higher. Everything still looks pretty solid on the weekly chart. I would like to see a volume candle start to confirm this rally. Last time we saw volume was on this big down candle, and that ended up being the culmination of that down move. And then looking at the daily chart, you can see that upper ATR, we had some hesitation at that level. We did break it on the 9th, and then on that Friday session, we did go a little bit higher, upper ATR resistance at 450. Again, that would take out all of these previous highs, test that resistance, but these ATRs are definitely sideways on the weekly chart. Momentum still slightly bullish, but overall just continuing to trend trade this, slight bullishness with some pretty significant overhead resistance, very similar to the SPY. Moving over to the Russell 2000 here on the weekly chart, you can see momentum and RSI are still bullish, but we are in a zone of resistance here. We did get a pin rejection on that weekly chart. Current resistance is 206.50, right in that zone here. And this is still a lower high, and we did see some rejection on that daily chart. And you can see it here. We touched that level just for a moment, ended up down 0.75 on that day. And you can see momentum here on the daily chart, definitely looking to pull back a little bit. Based on this structure, you would expect it to get bought up. Got the 21 EMA sitting down there at 198.68. So there is some support in the short time frames, but that doesn't mean we're not going to see any pullbacks, and it does seem like we will get one this week. Moving over to the Tasty charts, you can see on the weekly here that wick rejection. It still looks lower, and we're finding resistance at that first upper ATR. That's at 207.63. Still in bullish conditions here. That support's down at 183.65 on the weekly chart. And then looking at the daily, you can see we did get into bullish conditions here on the 9th, and then we did pull back on the 10th. but we're above all the MAs and SMAs. That upper ATR is at 208.88, and that would be the short-term price target here. It is worth noting that momentum is rolling to the bear side just a little bit, which is definitely concerning, but right now everything is still technically bullish. Moving over to the Dow here on the weekly chart, the Dow had a very strong week at 2.17%, finished at VWAP in the 9 EMA 2 weeks ago, and then last week got a very strong move almost to the high. Next resistance is 398.75, which is the high. Momentum swinging to bullish. Our side's right at the SMA here, so we'll see if it rejects off of that, but right now it does look quite strong, and it kind of looks like it's going to swing to a higher high. Definitely looks the most bullish of the group. And looking at the daily chart, you can see that same thesis coming to fruition. Clear, low, higher low setup, very strong push. Momentum continuing to gain strength. RSI not overbought yet. At this point, you would still expect it to hit that 398.75 level. Then we'll see what happens there. If we break above it, maybe retest and continue. At some point, there's going to have to be a pullback. We've had 8 days in a row of bullishness, so there will be a pullback at some point, but right now it still looks strong. Moving over to the equal-weighted S&Ps, you can see we've had 3 bearish weeks in a row going from the beginning to mid-April, and then we've had 3 bullish weeks in a row, but we have not fully recouped all of that movement. You can see strong volume on that selling. So this looks like accumulation to me, 3 bearish candles. We did find support at the 21, but we're in a zone of resistance here. Next resistance would be 167.53. I think we're probably going to find resistance there. It does look strong with a 2% up candle, closing pretty close to the high, but this move was substantial. So it's hard to say. Right now, it still looks bullish, and we're kind of in this channel, and it's doing its thing. But if we double top here at this previous high, or even a slightly lower high somewhere, I think this is going to break down to a lower low, which would put you at that 144 EMA down in the 155.90 area, and my support right there at 155.79. So technically bullish, everything is still strong, but I think there's potential for some resistance in this area. Moving over to the ratios, looking at the SPY Russell and the NASDAQ SPY, you can see both of these were basically flat on the week. We did see some SPY outperformance this week, bounced off of that 252 level. We talked about that trend line. If it was going to bounce, it really needed to do it there, and sure enough, it did. Not super convincingly, we didn't engulf the previous candle, so it still looks like a bit of a sideways choppy market. And similarly here with the NASDAQ SPY, sideways choppiness, slight down candle, did engulf the previous one, but it was a really small candle. Momentum technically swinging to bullish, but RSI looking a little bit weaker. So we'll see how this plays. If the NASDAQ does continue to fall versus the SPY, that's probably going to be bearish in the medium term. They both look kind of neutral, but if I had to pick a direction, I would say bearish, which means a little bit more risk off in my opinion. Moving over to SPY divided by the M2 money supply, we did step back to bullish here on the weekly chart. So this is swinging to bullish. Again, still looking for a rejection off of that SMA here on RSI, but that still gives you a little bit of room, maybe 1 or 2 more candles of bullishness. These 3 bullish candles have moved us from a 51.72 all the way up to 62.92, and that SMA is sitting up at 68.77. So that could be 1 or 2 more weeks, depending on how bullish they are. And structurally, this is still bullish. We're still way above sustainable levels at 22.05, which is concerning, but you have to trade the price action that you have, which is still technically bullish. At some point, I do believe this is going to push back down to that 22.05 level, but we just don't have a catalyst that spooked markets nearly that much yet. Moving over to the Mag 7 here on the weekly chart, you can see we did see some bullishness, 1.33% momentum swinging to bullish. And structurally, this is still a bull trend. You can see very clearly we have this trend line here. We're still holding that trend line. So structurally, still good. Currently, this is still a lower high, and we do have some resistance up at those all-time highs, 367.10. Right there, you have this longer-term trend line as well. So definitely some resistance, and you can see the RSI is really not confirming this rally. So this previous high, we're almost at that same level, but that previous level was an 82 on RSI, and you can see right now we're down at 66.01 and almost at the same level. So really powerful divergence happening still on the Mag 7, which again fits with my thesis that this will eventually roll over. We've seen consolidation here. Even with markets going higher, the Mag 7 has been consolidating, and I do think this is going to roll over. We just held that first test of this trend line, and if that breaks down, you got the 144 sitting down there at 307.22. Moving over to Apple and Tesla, Apple was down 0.18 on the week, but this momentum still looks strong. Looks like we're just taking a breather and that we're probably going to see continuation here. The Apple earnings were strong. We had good catalyst. We're still holding the level here at 182.37, and everything looks bullish, at least to some of these upper resistances. And looking at Tesla, this was a rough week, down 7%. Still holding that 167.34 level, but we said as soon as this trend line broke here this week, we expected it to go lower. If this zone holds, still could be in decent shape as a higher low. Momentum still says this area could hold, but structurally structurally it does look a little bit weak. Moving over to Amazon and NVDA, you can see both of these have been stalled at resistance 188.61 right here. Continues to hold that level. It did overthrow to a new high, but rejected from that zone very quickly. And then you can see NVIDIA here at a lower high still, rejecting off that 909.59 level, momentum bearish. And this is really what I'm talking about. I feel like we're just running out of momentum. Stocks are pretty expensive. Earnings is not really growing that much. And if these bigger stocks start to reject off of this zone, that is going to be a quite bearish indicator. And I don't think the rest of the markets can hold up if the Mag 7 rolls over. Moving over to staples and discretionaries, staples continues to rocket here, 2.29% to the upside, took out this level. 79.90 is the next resistance, but momentum, RSI, everything looks super bullish. And you can see discretionaries are stuck in this consolidation. So risk off seems to be the current thesis for markets, and eventually that usually means lower markets are set to come as those growth stocks start to lag and people move into safer sectors. Moving over to financials and utilities, you can see the same thesis here, 3.16 for financials, very strong, continuing to head to that 42.22 level, which is all-time highs here for financials. And then you can see utilities absolutely rocketing to these higher levels. Next one above this would be 74.04, very powerful momentum in RSI, everything looks super bullish. Again, these are safer sectors. People are looking for those safer sectors and getting out of growth, and typically that means a larger downturn is set to come, in my opinion. Moving over to breadth, 20 and 50-day breadth sitting at 76.96 and 56.97. You can see we are just a few dollars off of that 20-day high here around 86.53. If it overthrows that, usually gets into this range and then breaks down. It can take a while here, but it's been a very powerful move. I think we're going to get here and then we'll start to see what happens. Momentum continues to look good on the weekly chart. And then looking at that 50-day, we did finally see a step towards bullish. Pretty powerful candle there, 34.55%. This is a zone of resistance, and we've seen this before where we dipped, lower high, dipped. We'll see if we get another lower high here. If that happens, this is going to be quite bearish. But right now it does look pretty decent. Momentum swinging to bullish, RSI at a critical point. Want to see that overthrow the SMA, and then we'll see what happens from there. Moving over to 200-day breadth, this still looks quite strong. You can see we've been hovering in this 96 area for a while. Held a double bottom here at that 64.74 level, and we're back above 76.04. I think we might see this swing up here. Probably going to have some resistance around 82.70. Momentum step to bullish, RSI right at that critical point. We'll see how that plays. But right now, consolidation with no clear direction. Moving over to the dollar, you can see on the weekly chart up 0.23. This is still technically a bull trend. We're above all the EMAs and SMAs. We tested the 9 here, kind of in this bull flag. We tried to break out in both directions here and had no clear success. Momentum starting to fade. RSI still holding above the SMA. So overall, you would have to say this is still slightly bullish on the weekly chart. But if we look at that daily chart, it's pretty hard to tell. You can see the fake breakout here, fake breakdown here. Again, tried to break out, hit the 21, rejected, but we're also holding a higher low. So you could argue maybe this is sideways consolidation. If it breaks higher, obviously that'll be weaker for equities. But right now, I would say it does look a little bit weak with 2 clear rejections to the upside. Moving over to yields, we have seen these consolidate and start to break higher. It seems like these are both going to swing a little bit higher. And if that happens, that should be bearish for equities. 10-year hasn't really done it yet. 2-year did break higher off this consolidation. Definitely some resistance to the upside, but momentum on both of these still looks a little bit bullish. So see how this plays. Could be a lower high setup, but that would still give you some short-term bearishness in my opinion. Moving over to bonds, you can see J&K breaking down from that 21 EMA on the weekly chart. That's not great. That usually means we're going to get a lower high. If it breaks down from there, that's going to be quite bearish, and that's probably leading markets lower again. A little bit of a leading indicator there. And then TLT rejecting off of that trend line again. Broke down here, retest. If this breaks down further, that's going to be quite bearish, and that means yields will probably be headed higher and equities will probably be headed lower. Overall, still a downtrend, just looks like a retest. And I'll be watching this one closely here next week. Moving over to the VIX, you can see we are at a clearly important level. Let's go ahead and extend this out. Pretty important there. We haven't touched it yet. Again, 1 or 2 days until we probably touch that level, and then we'll see what happens. You can absolutely consolidate here for a couple of days before you see spikes, but this is the zone where you typically see them. At least over the last several months, this is where we've been. So watching this zone closely, but still looks a little bit bullish for equities. Moving over to my accounts, you can see we finished at $133,592. So pretty decent, just short of $2,000 on the week. Nice little move, especially with markets that were relatively choppy, but still positive on the week. Pretty much kept up with the NASDAQ. And that's usually the goal, keep up with the NASDAQ on the up moves, and then take far less drawdowns on the down moves, at least for my style of trading. And that is what I did pretty well here this this week. In terms of positions for the Monday session, you can see I still have a covered call on the IWM for a 204, and that's on my IRA. So far, not doing too bad. Like to see this cross the $1,000 mark. That would be cool. And I do have an opportunity to do that, 92 cents here. And then looking at the Qs, I have a put at 442. That's a little bit aggressive. Based on all the charts right now, I'm a little bit concerned we could see a dip into the Monday, and you can see even the after hours price action down about 50 cents. That's cutting pretty deeply already into my credit on that position. I still have a call at 444 helping to protect these puts, and I have a covered call here at 437, so I'm still pretty decently protected on both of these positions, but overall probably a little bit aggressive and watching for that dip early on the Monday session, telling me to get out of all of these positions if necessary. Let me know down in the comment section what you think CPI is going to come in at this week, and is it going to price out all cuts, or could it be so bad that we need a hike this year, and where do you think the price target is for markets if that happens? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.